actually mean populist budgets. So to discuss all of this and more, we have Abneesh Roy, who's the Executive Director, Nuvama Institutional Equities, joining us today. Abneesh, good to see you in. Been a long time. Let's start with consumer staples itself. The belief was there is rural recovery in the offing. The normal monsoons would aid demand going forward. And then the added benefit of maybe some sort of populist measures coming by. Of these three triggers, two seem a little iffy. Populist measures may not come by because everyone is believing that there is continuity of policy. And secondly, Manisha just told us that, rainfall in the month of June was a lot lower than expected. So what's your call on consumer staples now?
Sure, thanks. We expect that from Q2, a lot of the issues what the sector has seen in terms of negative pricing, local players, rural slowdown, etc., will start reversing from Q2. Q1 will be more of the same what we saw in Q1. For example, for Hindustan Unilever, we continue to see negative pricing. Even for Asian Paints, we'll see that issue, which was there even in Q4. So we see that from Q2, maybe HUL will start seeing flattish pricing, and in H2 we'll see the price growth coming back. Coming to a specific question on the coalition government, see, now budget will be in the July 3rd week, so we'll have more clarity. But yes, definitely consumer companies are expecting that on the rural and even on the urban consumer, there should be some comforting good news. On the rural, the expectation could be more NREGS outlay. In the past, what we have seen is it's more on based on demand. So even if the outlay initially is low, we have seen that eventually NREGS demand is, the spend is much, much higher. Similarly, on the MSP hikes, this government in the last 10 years has been more measured. So could there be some change? Definitely in coalition politics, we do see that could happen. Plus, in the next 2-3 quarters, we have got 3-4 key state elections. I would say that there is an optimism that in terms of MSP and in terms of export also, if you see onion exports was impacted, and then we saw what happened in Maharashtra. So clearly there is an expectation. On monsoon, if you see, these are very early days. So yes, I will say that yes, 20% lower than the expectation is disappointing, but very early days. We have a 4-month season, so taking a call based on the first few days, I think it's very early days. But yes, I would say that we continue to remain positive on Varun Beverages, Pidilite, Godrej Consumer, Nestle. These are unfortunately at 52-week high also. We continue to like United Breweries also. Valuation comfort is high in HUL and Asian Paint, but currently the triggers are missing in those two stocks. Yes.
Oh, okay. So triggers are missing for the big boys such as HUL and Asian Paints. Abneesh, what about the jewelry retail space? There's an expectation that there's going to be a lot more formalization in the market taking place. In that context, then, what would you like in this particular segment? The Titans of the world, the Kalyan Jewelers, the Senkos?
I think clearly that formalization still huge headroom is available. If you see, hardly 30-35% has been done. So almost 65% of that is available. And last 4-5 years, we have seen a lot of government steps are helping there. But in the near term, I think especially first half, Titan will continue to underperform because it has very high base in terms of margins. The competitive intensity is very high. The lab-grown diamond also, if you see, is 1/10 the cost of the real diamond. So that is a clear risk which is there. In US, we have seen lab-grown diamond really take off. So it's a good stock to own from a 2 to 3 years perspective. But I'll say from a next 6 months perspective, the results will be muted. And that's why there could be some time correction, or there could be some absolute correction also. But yes, clearly the other jewelers like Kalyan, etc., we don't have coverage, but they are growing faster given they have a smaller base and they're expanding faster also. So overall, they will also see the competitive risk which is there for from the local players because gold prices are up, and definitely studded diamond is a risk currently from the lab-grown diamond. So I will say that next 6 months, Titan especially, we are underweight. We have downgraded the stock a few weeks back, and we continue to remain underweight from the next 6 months perspective on that stock.
All right, so underweight on Titan for the next 6 months. Today, that stock is actually underperforming the other peers that you pointed out as well, Kalyan and Senco, both of them. There was a brokerage note that came this morning. Abneesh, I wanted your thoughts on two sectors in particular. One is the QSR space. That seems to find its feet back right now. At least the stock price is telling you that, there is some traction here. And the second one is the retail space. Trent and Avenue Supermarts, both of them too have begun to do well once again. Trent was always doing well. So Trent, Avenue Supermarts, ABFRL and the QSR space. Your call here.
So we continue to remain positive on Trent. We upgrade the target price and then it touches that. So that issue of high valuation remains. But if you see the main growth driver for Trent is Zudio. And if you compare Zudio number of stores versus Domino's, it is still a 3x to 4x kind of a scale up possible. And good to note that even Domino's expects that there could be 4,000 store universe versus the current 2,000. So Zudio is currently hardly 500 plus versus Domino's at 2,000. So the scale up opportunity is big, the urbanization and new cities getting added. So we continue to remain quite positive on Trent, but it remains a compounding story rather than a valuation comfort story. On DMart, we had highlighted earlier that two of the issues which investors had on the slow growth or expansion in terms of stores that got addressed in Q4. We are seeing that margins also are coming back gradually because of the discretionary part of the segment also doing well. And we are seeing that the competition from the quick commerce and e-commerce also is becoming more rational, and that's reflected in the good share price performance of Zomato also, because clearly Blinkit is getting good valuation because of the improving metrics. So I will say DMart continues to remain a very good play on the compounding. Only 2 states they have a good presence. So I will say that stock continues to remain a very good compounding story. On rest of the stocks, we had pitched earlier, Aditya Birla Fashion. That stock again has done well because of the demerger news. But in my view, near term, the growth slowdown in the Van Heusen and that part of the Madura part of the business, I think that will continue. Pantaloons should do well, but our sense is near term, Madura Fashion will see weaker numbers. But it remains more of a demerger story for us. So we'll continue to prefer Trent, DMart in that space in terms of the retail. Now coming to QSR, yes, the stocks have underperformed last 1 year because numbers have been weak. But I think the recovery in terms of numbers of same store sales growth, etc., should happen post Q3 only. In that space, we like Jubilant Foods the most because they have already started seeing decent recovery in the delivery format. But in-store dining continues to remain a challenge.
Okay, all right. Well, you're talking about dining, and I'm going to ask you about Zomato because that one's in focus. It may, in fact, acquire Paytm's movie and ticketing business. What do you think of that possible proposal? Do you think the valuations will change considerably?
I don't cover that stock personally, but yes, covering from the media space, clearly that space has seen challenges in terms of movie viewing. We have seen that last 2-3 quarters, there is a challenge. But if I see structurally, clearly it makes a lot of sense for Zomato, given they get one more big growth driver in out-of-home, that kind of a consumption. So yes, I would say that it makes a lot of sense. But on the valuation, we'll get to know when the deal happens. But I think it will make a lot of sense because it's more of consolidation. And clearly for the number one player, Book My Show, it will be negative. But my sense is once the Cricket World Cup T20 ends, we would see the much awaited revival in terms of the movie viewing that should come back because that has been clearly a disappointment. The movie pipeline is good, but because of the elections, because of the exam season before that, and now the T20 World Cup, we have seen that the movie viewing has been a disappointment. But hopefully that should recover post that.
Do you have a view on ITC? Are you keeping it at bay till the budget comes and the GST Council meet?
Which stock?
ITC.
Yes, ITC, definitely what we are seeing is investors are waiting to see how the new health minister's policies are. Last year, there was a slight increase of 2 to 3% on the cigarette taxation. So we don't see any big probability of a sharp tax hike or even a moderate tax hike currently, because 2 back-to-back years we don't see. Second thing is cigarette legal volumes. Currently, there's hardly any growth, 2-3% growth. So in that condition, if there is a moderate or sharp tax hike, that will be negative for the legal cigarette, and the smuggling will increase. The hotel demerger is mostly baked in terms of pricing. So for the stock to do well, now cigarette volumes have to come back to at least 4%, 5% kind of a growth. And the agri business, which has been a key disappointment, that also should start to recover. Those 2 things would be needed for the stock to do well. 4% dividend yield is good, but currently near-term triggers are missing for ITC.
Okay, all right. We're going to let you go on that note. Abneesh, interesting chat as always. Thanks very much for joining in and speaking with us. We'll take a short break, but a lot more on the markets, lots of stocks in focus. So we'll be back with more. Stay tuned.